Hello again, traders. Dwayne here from DRFX, Forex and trading as Daddy Papi in the Dukas Cup trading competition for this month, July. Now, going to be taking a look at the recent trade that was made on the Aussie Kiwi dollar a few hours ago, where I closed the trade out for a short gain of 47 pips, as I took advantage of this recent sharp rally that took place on this currency pair over the last 8 hours. Now, this is the 4-hour chart, and the 4-hour chart was the one that provided the signal to indicate the start of this bullish movement. But I'm going to take a step back and take a look at the wider picture of the daily chart to show you exactly the overall context of this trade. So going back on the daily chart, what you'll notice here on this time frame is that the market had actually formed a fairly large range setup, where the market had recently rallied at support and was headed back to the resistance boundary. Just gonna clear this indicator, this moving average. As you know, I generally don't use, I don't use indicators any at all. I use candlestick formations and trend lines and consolidation boundaries. Once you know the right type of signals, the right type of candlestick signals, and you know how to use trend lines and consolidation boundaries correctly, you can generally be successful in currency trading without the need to use indicators for your trading decisions. It's a lot simpler, a lot clearer, and your charts will remain fairly clean, and you'll be able to make better decisions. And I personally prefer them. There are many traders who prefer to use candlestick signals and trend lines, but there are other persons who feel more comfortable using indicators, and there are others who also use a combination of both. So it's up to you to decide which method you'd want to use. But anyway, getting back to this, the market had formed a consolidation setup in the form of a range, where it had created this resistance boundary across these points of resistance. And this was complemented by the formation of a support boundary. Let's just move this down here. Whereas you can see the market initially had a horizontal boundary, but because of this recent rally that took place here, we would have to adjust the support boundary to take into consideration this new support point. And so instead of a horizontal boundary, we have an angled boundary, which essentially would change this from a range setup to a pennant setup. So the market was basically rallying at support at this new support point to take us back to resistance. And the most recent signal given by the daily chart to indicate the start of this movement was this breakout candle here. Now, taking a closer look, you'll notice that the market had also formed a consolidation setup. This one taking the form of a range. Where, as you can see, the market rallied sharply at the support boundary and eventually broke above resistance, giving us this sharp and aggressive bull candle. So the expectation was that given this very convincing move above resistance, the market would continue this move towards resistance of the larger consolidation setup and provide a trading opportunity to take advantage of this move. So having seen this, the next step was to go on the 4-hour chart to look for a trading opportunity to take advantage of this movement. So heading back to the 4-hour chart, what you'll notice is that the market took a little bit of a break after forming that daily candlestick signal, started to move sideways, and in so doing, it actually formed this consolidation setup here in the form of a pennant. Resistance boundary here, and the support boundary here. Connecting these two support points, we have this pennant setup. So this was a setup that had been formed, and eventually the market broke out with a strong bull candle. I believe that this was in relation to a news announcement that took place at this time. Again, I don't really pay attention to news reports. I don't think they're necessary when it comes to trading on a daily chart, on a 4-hour chart. So the focus was on the candlestick formation itself, and once the market gave this breakout signal above the resistance boundary, the next step was to take advantage of it by entering here, placing a stop loss just inside of the support boundary, and exiting at the resistance boundary here. As you can see here, the market did not take a long time to hit the target, hitting the target and providing me with a gain of 47 pips. So a short, sweet trade, taking advantage of the continued bullish movement in favor of the Australian dollar as part of the overall movement from support to resistance of the pennant setup on the daily chart. This move from resistance to support within this larger consolidation setup took place with a breakout from this smaller setup that led to the formation of this new support point. So another example of how consolidations can be traded in this trading competition here. What I've noticed is that there have been a lot of pairs that have a lot of consolidation patterns. So once you know how to trade them and take advantage of them, you can gain a lot of pips in this competition in a very short period of time. So the hope is that following this sharp movement, the market will perhaps take a little bit of a break and move sideways here, perhaps pulling back. And I think what's going to happen is that it will either, well, there are two options. It will either head back inside of the consolidation and head back to support, or it will start to break out above the resistance and start significant gains in favor of the Australian dollar. Now, the Australian Swiss franc and the Aussie US dollar are both moving sharply bullish. So I think the Aussie Kiwi dollar might follow suit and actually break above the resistance boundary. As you know, many of these currency pairs are positively correlated. So I think given the fact that the Australian US dollar and the Aussie Swiss franc are both bullish right now, I think the Aussie Kiwi dollar has a very good chance of breaking above that resistance boundary and starting a strong breakout in favor of the Australian dollar. Here you can see that the Aussie Swiss franc also breaking out sharply. So I think if the market holds and this candle closes as is, then it's a very strong indication that we're going to be seeing continued bullish movement in favor of the Australian dollar across the currency market. So the thing to do now is to wait for trading opportunities on lower time frames, the 4-hour chart, and look for strong setups and strong signals to take advantage of these moves.